my presentation coverage, I've tried by all means to summarize it in such a way that we'll be able to understand what shares are, what happens when one invests in shares, and also what are some of the risks and returns that are there when it comes to investing in shares. So I'll talk about the introduction, the SEC role, the understanding of shares, what are shares. Then I'll also look at the share trading process. What happens if one is to buy shares? What procedures are there? Then from there, I'll delve in and I'll delve in and look into the risk and return, and I'll conclude. So just about the SEC, for those who are joining us for the first time, it is imperative to know where this presenter is coming from and who are in charge of these town halls. So the Securities and Exchange Commission is the statutory body that was established in 1993, and it has continued its existence under the Securities Act number 41 of 2016, and which was further amended by the 2022 Act. So in summary, the Commission is the regulator of the capital markets in Zambia and has got a statutory mandate. We can actually ask ourselves, what statutory mandate are we talking about? So the statutory mandate that the Commission has is to protect the investors in the capital markets. Further, the Commission also plays an important role in overseeing the securities industry, including shares, to ensure that the market is fair and transparent, and above all, just to protect the investors. Given this broad understanding of who the SEC is, where the SEC emanates from, there are two things that we need to understand about the SEC. The SEC has got a dual mandate, meaning there are two mandates that the SEC has. The first one is to protect the investors in the capital markets, and the second one is to develop the market. So we have realized that the securities market has not yet developed, and it needs to develop. Therefore, we have this dual mandate. Apart from investor protection, we are also trying to develop this market so that together we can see that this market develops. Having that background about the SEC, then we need to understand what is the SEC role. Before we even talk about investing in shares, what are shares, we need to have a basic understanding of what is the role of the SEC in regulating and overseeing the shares investment in Zambia. So our responsibility, number one, is to formulate the regulatory framework. And this regulatory framework is the one that enforces rules and regulations that govern the issuance, trading, as well as disclosure of shares in the market. Developing this framework, we are coming from the background that we want to maintain integrity of the securities market and be able to protect the investors from fraudulent activities. This can only be achieved if we have robust regulatory frameworks, and this is what one of our responsibility entails. When we talk about the capital markets, disclosure is very, very important, because all the decisions that you and I or the institutional investors are going to make borders on what is disclosed. Therefore, as the Commission, we mandate that public traded companies provide accurate and comprehensive information to the investors so that they are able to make informed decision, because it is out of this information that then the investors will be able to make informed decisions. But this can only be done if the disclosure requirements are followed. And hence, as the responsibility of the Commission, we ensure that there are full disclosures in terms of the requirements that the public traded companies need to disclose. As the Commission, in terms of share investments regulation, we are also part and parcel of the enforcement of the laws, and the SEC, therefore, in this regard, is able to investigate and take legal actions against individuals as well as institutions that are engaged in fraudulent or manipulative activities or practices that then can harm the investors or be able to destabilize the market or the integrity of the securities market. As I earlier on alluded to, the Securities and Exchange Commission has got a dual mandate. So we do not only protect investors, but we are also we are also making sure that the markets are developed. And by doing so, we've got a responsibility that investor education is part and parcel of the works that we do. So as the commission, one of the responsibilities is that we ensure that we conduct initiatives that are there to educate investors about risks and rewards that are associated with investing in shares. And this, like today's webinar, these are some of the things that we are doing in terms of investor education, so that the investors, individual investors or institutional investors, are able to make informed decisions and being able to avoid becoming victims of what is becoming common in our market and in our country, Zambia, the issue of scams. But when we're talking about investing in shares, we also need to understand the role of the Securities and Exchange Commission, which is also anchored on facilitating public investments. And in doing so, therefore, as the Securities and Exchange Commission, we are able to register securities. And in registering securities, companies that are planning to offer securities to the public are typically required to register these securities with the commission. And the registration process involves providing detailed company information which can relate to company financials, management, operations, and also the risks. And we as the SEC, then we are able to review this information and be able to determine whether the securities can be offered to the public or not. And in facilitating this public investment, as the Securities and Exchange Commission, we're able to conduct market surveillance. And in terms of market surveillance, all we are doing is to ensure that we monitor our market, the securities market, to look out for irregularities. Sometimes it can be insider trading when it comes to shares, market manipulation, and other fraudulent activities that could then harm the investors like you and other institutional investors. We also do licensing as well as regulation of intermediaries. And in this case, we license market participants such as the brokerage firms, investment advisors, asset managers. And these intermediaries that we license are key because they facilitate in the buying and selling of securities or shares on behalf of the investors. And as I earlier on stated, market development, we always want to develop this market so that our market can become liquid enough, we can have more investors in the market, but all this can be helped out through the initiatives that come through market development initiatives. My slide there just shows what we do as the Securities and Exchange Commission, and above all, the SEC is committed to empowering investors through different comprehensive education initiatives. And when we do this, in the back of our minds, all what we want is to have informed investment decisions to be made by investors. Even when they are buying shares, we want them to have this information so that they're able to make informed decisions. And in doing so, as a commission, we have come up with initiatives that are actually helping out a lot of people to be able to make informed decisions when it comes to investments. And one of them we've come up is the savings and investment guide. As we see a lot of people being scammed, I think this becomes key in terms of people having a better understanding of what kind of savings and investments they can make in terms of investments in the securities market. Alongside these educational resources, such as the investment guides that we have issued as the Securities and Exchange Commission, we also issue warnings and alerts about investment scams as well as fraudulent activities. The ultimate goal of all these initiatives is anchored on ensuring that investors, regardless of their level of expertise, are confidently able to navigate the market so that they're able to make informed decisions that align with their financial goals. This broader perspective of what the SEC does, the responsibilities that it has in terms of regulations of the securities markets, we now look into our main business of understanding what shares are. And in doing so, for us to have a better understanding of what shares are, we're going to ask ourselves three questions. And these three questions are then going to lead us into the steps of now what the share trading process is. So if we understand what shares are, that's the first question. Why do companies issue shares? That's the second question. And why do people invest in shares? As the third question, then we'll be home and drive to be able to understand what shares are and what is the trading process with regards to investing in shares. So just like one would own a house, that's what shares are. So shares represents an ownership stake in a company. So there are listed companies which I'll speak to on the securities market or the stock exchange that have got hundreds of thousands of shares. And it has got shareholders. And these shareholders are institutional as well as individual shareholders who are like you and I. So this understanding that we can be part and parcel of a company and become shareholders defines then what shares are. So it represents a stake in a company. So if you buy shares, you become a shareholder in a company and you own a stake in that company. So that is the basic understanding of a share. But these shares entitle you to risks and rewards. And later on, I'm going to talk about the risks and rewards of these shares. But then, after understanding what these shares are, we now need to ask ourselves this question: why do companies then issue shares? The simple answer is to raise money. So companies offer their shares on the securities market with a vision of raising money. And by issuing shares to the investors for cash, the companies have got different investment options or opportunities or projects that they would love to invest in, but due to lack of funding, they go to the market and be able to issue these shares. And once those shares are bought, then companies have raised money that they can then invest and be able to advance the projects that they've set in their various strategic plans. So after we understand what shares are and why do companies issue shares, then we have to ask ourselves, why do people invest in shares? Why do institutions invest in shares? So over the long term, most people invest in shares for capital growth and dividend income. Capital growth or capital gain and dividend income are two concepts that we need to understand as we talk about shares. I'll later on be able to delve in and try and dissect so that I give a better understanding to everyone, regardless of your level of expertise, to be able to understand what capital gain is, what dividend income is. Because once we understand this, then we'll know that if we invest in shares, the outcomes will be these and these. Having known what shares are, why companies come to the market to raise capital or funding, and why then institutional investors and individual investors invest, it is imperative to understand, therefore, the share trading process. So if you want to buy shares, this share trading process needs to be understood by every investor, because it is a process that will either make you to sell or buy your shares or securities. Step number one is to conduct investor research and decision making. It is important that before you make a decision, you have some form of basic research where you do your research and be able to analyze, okay, these are listed companies, how are they performing, before you make a decision to invest. And based on the analysis that you're going to make, investors then would make a decision as to whether to buy or sell their securities. So investor research and decision making are very, very important components in the share trading process. You just have to, as an investor, to do some research and be able to make an informed decision. Step number two, before you even trade, you need to open up an account with a broker. So you can only open an account with a broker as an investor, and these brokers are registered and licensed by the SEC. So in opening up this account with a broker, you then have to submit your proper KYC, know your customer. Who are you? What are your names? Your bank details, your source of income, funds. Those are imperative as you open your account, because later on you realize that as you make these transactions, all these are linked to these share trading processes. So as you open your account with a broker, and if it is opened successfully, you can then place an order, whether to buy or sell your securities through the chosen brokerage firms. So there are a lot of brokerage firms that we have, and you can find them on the SEC website, who have been licensed by the commission. So investors would then place a buy or sell order through their chosen brokerage firms. Then as you make this order, you need to ensure that this order must indicate the amount and the price of the stock that one wants to purchase. So if you want to purchase the shares, for example, in Chilanga or in ShopRite, you have to indicate the amount and the price at which you want to purchase those securities. Those two, when placing orders, become cardinal. After you place an order, you go to the fourth stage. So what happens in the share trading process is that there are orders that are supposed to be matched. So in the fourth stage of the share trading process, orders are matched to the Lusaka Stock Exchange automated trading system. So this system is then able to match these orders that you have made. So if you make an order as a buyer and there is a seller, then there is a matching order. The system, the automated trading system, is then able to match these orders. So the system automatically picks up the orders from the market, and then it automatically matches, and if it matches, then there is the buy and the sell side meeting together. So buy orders are then matched with the sell orders based on, one, the price, and secondly, on time priority. If this is done, then the last stage, which happens in the share trading process, is a trade execution. So by trade execution, what we are saying is, once orders are matched, a trade is then executed. So the trade price is then determined by the price agreed upon by the buyer and the seller. So this five-step share trading process is what happens when one is buying or selling their shares or securities on the stock or on the securities exchange. There are key concepts that we need to understand in as much as this share trading process occurs, and these are very cardinal as an investor to be able to know and understand. One of them is the trade confirmation. And under the trade confirmation, what happens is that if you are the buyer or the seller, you receive confirmation from your broker or your brokerage firm. Now, this confirmation has got components that it includes. So this includes the trade price, the quantity, and the traded time. So as a buyer or as a seller, you have to receive this information from your brokerage firm. Then there is also payment and delivery. So under payment and delivery, what we need to understand is that there is a buyer and there is a seller. So what happens to the buyer is that from the buyer's side, their account is debited. Meaning, if you're buying, money is removed from your account in layman's language. And to the seller's account is credited. By credited, what we mean, the seller now receives the money. So there is this payment and delivery concept that we need to understand. We also need to understand the concept of settlement and clearing, because if you're an investor and you want to invest in shares, settlement and clearing becomes very cardinal to understand. So details about the trades are sent to what is called the CSD, or the Central Securities Depository, for clearing and settlement. So this CSD then ensures that there is proper ownership of transfer and facilitation of payments. So the transfer of funds from the buyer to the seller. But then we also need to understand that settlement is typically T+3. So what do we mean by T+3? So it's the trade date plus 3 days business. So what happens is that if I trade today on a Thursday, that's a T, it's a trade date. Then you have to count 3 days after the trade date. So Friday, Monday, and Tuesday. That is given if there are no holidays. So that is what happens. So settlement is typically T+3 days in Zambia. So that is what happens. So when you hear people are talking about the concept of T+3 trade, all they are saying is that for the settlement to occur about the trade that you have conducted, you have to count the day at which you conduct your trade plus 3 days after the trade day. That's when there will be settlement. And by the settlement date, all financial ownership and transfers are finalized. So these are some of the key concepts that you need to understand if you are to invest, or if you are an investor in shares. Then there are also transactional costs. So these are costs that are related in trading of shares and come in form of commissions, and these commissions are relatively low. Having an understanding of what shares are, why do companies come to the market to raise funds or issue shares, and why do people invest, and later on having a basic understanding of what happens in the trade process and some of the key concepts that are involved in the trade process, we can ask ourselves then, what are the benefits of investing in shares? This is a very important component, because as you invest, you're also looking at what are some of the benefits that I'm going to incur when I invest in shares, or if I buy securities or I buy shares, am I able, or will I be able to have benefits? So the first benefit is what is called a capital gain. So a capital gain, in simple terms, if I'm to break it down, if today, for example, company X has issued, company X is listed on the Lusaka Securities Exchange, and the price for a share is 2 kwacha as of today. Then, as an investor, you buy those shares or that share at 2 kwacha. But then later on, because the company is in operation, maybe the company performs well in that year, dividends are declared, and you see an increase in the share price. So you are buying a share at 2 kwacha for company X, which is listed on the Lusaka Securities Exchange. And then at the end of the year, the share price, which was at 2 kwacha, is now at 5 kwacha. So the same shares that you bought at 2 kwacha are now fetching at 5 kwacha. So if they are fetching at 5 kwacha, there is that movement from 2 kwacha to 5 kwacha. So that difference is what we are referring to as a capital gain. So the same shares you bought at 2 kwacha, actually you can sell them at 5 kwacha. And if you sell them at 5 kwacha, then you have made a capital gain. So this is the benefit of investing in shares. The other benefit is liquidity. And when you talk about liquidity, we are talking about transacting. So if I buy shares, I can also be able to sell shares. So if today I've bought shares, for example, in company X, 1,000 shares, and I've got some liquidity pressures, I can sell shares. And in that process, there is liquidity. So you're able to buy as well as sell. So that is also a benefit of investing in shares. Then also another benefit is on diversification. And by diversification, what we mean is that the listed companies on the securities and exchange come from different sectors. So we've got institutions or companies that are listed that are from the banking sector. We've got institutions that are listed that are from the telecoms industry. We've got institutions that are listed that are coming from the mining industry, agro processing. So you can mention it. So it brings a diverse kind of options where you can be able to invest. So instead of just investing in one, for example, sector, you can invest in different sectors. So if maybe the tourism sector is not performing, you find that the telecom sector is performing. And if you have invested in the telecom sector, you then offset the outperformance that would occur in the tourism sector. So that is one. That is also another benefit of investing in shares. Another benefit which is key is the dividend income. So at the end of the financial year, companies would declare what are known as dividends. So when companies declare dividends, the understanding is that for those who have bought shares in companies that declare their dividends, will then receive their dividend income. So it's a yield on investment. So whatever you have invested in, it's now paying you back, and dividends are being paid back. Underneath my benefits, I've put a screenshot of a dividend notice and of how it looks like. So this company declared the dividend of 2 kwacha per share for the financial year end 31st December 2024. And this is in accordance with the requirements of the Securities Act. Remember, I spoke about the Securities Act and the listing rules of the Lusaka Securities Exchange. So when dividends are declared, there are two dates that you need to be aware of. One is the record date, and in this case, the record date was set for 2nd May 2025. And another date is the last trading date. So as an investor, you need to be very careful when you see such kind of dividend notice, because this information is material enough for you to make a decision. So for the last trading day speaks of when one is eligible to receive the dividend. So in this example, the last trading day is 25th April. So now remember, I spoke of the T+3 days. So under the T+3 trading days, I want you to relate to this concept from the practical aspect of it, so that you're able to marry what I'm talking about. So the last trading day for this company is 25th April. So what happens is that if you trade on the 25th of April 2025, and by 25th April 2025, we mean it's tomorrow. So if you trade tomorrow, so your Friday tomorrow will be the T day, the trading day. But then you have to count now the 3 days for the trade to settle. So for the 3 days, then what happens is that you have to count. Monday is a holiday, it's already out. Already you've traded on the 25th, the T is gone. So you begin from Tuesday, Wednesday, and Thursday. Thursday is 1st May, it's a holiday. So Friday will be the 3rd day. And that is why they've said, notice is hereby given that the dividends shall be payable to shareholders registered in the company's book at the close of business on Friday, 2nd May 2025. So someone who's going to trade tomorrow will be eligible for the dividends. But then if you trade on Tuesday, you'll not be eligible. So as you make a decision to buy shares, for example, in such kind of an institution, this information has to be in the background, that if you trade on Tuesday, you do not qualify for the dividends. So these 2 terms are important as we speak about the dividend income. And I thought we should highlight this so that we have a better understanding of what we mean when we say dividend income. Investment comes with risks, and there are also risks that are involved when you invest in shares. A lot of them, there are a lot of risks that we can talk about, but specifically I'll talk about 5 risks. I know there are a lot of risks, just like benefits. There are a lot of benefits, but I've just spoken about 4 or 5 benefits. So the risks of investing in shares, number 1, it has to do with market volatility. Sometimes the share price can fluctuate, and this is based on the market conditions as well as the company performance. So it's not always that the share price can go up. Sometimes the share price can go down. So if you buy shares at 2 kwacha today, maybe by tomorrow or the other day, they'll be trading at 1 kwacha. Therefore, due to that market volatility, you can then make, there are those risks of where you can sometimes lose out. Then there are also company risks. And under company risks, all what we are saying is that the risk that the company's performance may decline. And if the performance of the company declines, it has got an effect on the share price and on the dividends. In as much as companies have got different dividend policies, but then the performance of the company is very, very important. Therefore, if we see that the performance of the company has declined, it affects the share price as well as the dividends to be declared. So, for example, if the dividend to be declared was 3 kwacha, but maybe the performance of the company has gone down, you find that it will go down maybe to 1 kwacha. So those are the risks of investing in shares. The third risk is that there is no guaranteed returns. So unlike bonds, shares do not guarantee returns and may result in capital loss. And this is what I spoke about when I spoke about the fluctuations of the share prices. Then the fourth risk would be economic and political factors. Changes in the economic condition can affect the performance of the company. Changes in the government policies or geopolitical events can impact on the performance of the stock. Trump in the US says about these tariffs, they've got an economic impact, and these can drill down to the stocks that are listed on the various stock or securities exchanges. Then there's also the climate risk, which is coming up on board. There are potential consequences of climate risk that brings changes to businesses. Some businesses would even shut down due to these risks. So all these risks and benefits that I've spoken about becomes very, very important to understand as an institutional investor as well as an individual before you invest. So there are a lot of listed entities, as you can see. You can buy shares in Zanaco, ZCCM, Standard Chartered, Zambif, Africa Explosives Limited, Bata, Puma, Copper Belt Energy, Shoprite, British American Tobacco, Zambia Sugar, Lafarge, Rios. So all those are listed on the Lusaka Securities Exchange. Given what I've shared to you in summary about shares, what are shares, what is the role of the Securities and Exchange Commission when it comes to the regulation of shares, who can invest, the individuals as well as institutions, what are the benefits, what are some of the risks that are involved in investing in shares. This is very, very important, but more so understanding the share trading process. And as I end my presentation, we'll be talking about the various kinds of products that are in the capital markets. And as of today, 24th April 2025, we're talking about your investing options. And we're trying by all means to give some level of understanding of what shares are. And we've talked about the shares. The next town hall, which will be on the 25th of May 2025, the last Thursday of the month, we'll be talking about collective investment schemes, the CIS. What are these products? How do they operate? How are they regulated by the Securities and Exchange Commission? 26th June 2025, we will be talking about your investing options, particularly in bonds and other products. How do we trade in government bonds and in the secondary market, the corporate bonds? So all this. The aim of us sharing this information is stemming from the background that there are a lot of scammers that have come on board and would love people to have this information on their fingertips so that as they make the decisions to invest, they are making these decisions from an informed perspective. With that said, I now end my presentation. I'll now invite for questions, suggestions, some clarifications, contributions, as well as some takeaways. Back to you, Mrs. Ngala.
Okay, thank you so much, Francis. That was a very, very lovely presentation. I'm sure our audience has learned a lot. And if you've just joined us, you're listening to the Securities and Exchange the last Thursday of the month. And today our topic has been an introduction to share. what they are. We've discussed how they work, how they operate, the benefits and the risks of investing in shares. As Francis has alluded to, this is a three-part series, which is talking about your investment options that are found in the capital markets. So we have several options, but we're going to focus on the traditional products, how to invest in the traditional products, and we'll be explaining those ones in the next town halls to come, May as well as June. So to start our Q&A, we are going to get a few questions from our chat section. I'm going to focus on the questions that are relating to the topic at hand. Okay, so there's a question from Mudiase. How do, for example, if I want to buy Bata shares, how do I know that there are shares out there for me to buy? By the way, just a disclaimer, as we are making this town hall, we do not give investment advice. Instead, we're giving you financial information, educational information rather, which is just educational in nature, just for your information, so that you are well informed about the do's and don'ts or the how to go about investing in shares. So we will not be giving any financial advice or investment advice. We will not be guiding you on where you can place your investment. That will leave for the professionals who are licensed and regulated by us, the Securities and Exchange Commission. So please note, that's how we're going to move forward. So Francis, we can start with our first question. So this person would like to invest in Bata. Just from an educational point of view, how do they go about it? How do they know that there are shares out there for them to buy?
Yeah, thank you, Stali, for that wonderful question from one of our listeners. As I earlier on stated, if you are to make investments in these listed entities on the Lusaka Securities and the Exchange, we've got brokers who are licensed by the Securities and Exchange Commission. And if you interact with a broker who is an intermediary between you as a buyer and the seller of the securities, the broker will then be able to advise on that context. So the key is to visit the broker, then the broker will be able to advise on that.
Okay, well, thank you so much, Francis. That's well captured.
Sorry, I was saying, welcome. If you've just joined us, we'd like to welcome you to today's town hall. We're now doing our question and answer session. And I'd also just like to note that we have an audience on Facebook. And if you've got questions there, please also just post your questions in your comment section on Facebook. We'll be able to also address them. Okay, what happens when a listed entity or company fails to submit audited accounts as required by law? What are there any punitive measures? This is a question we got from James.
Okay, I'll pass this question on to Natasha.
I'll pass this question on to Natasha. Could you assist us with the response for that?
So with regards to submitting audited financial statements, so if a listed company fails to submit its audited financials within the time frame that has been stipulated by the relevant laws or the listing requirement, there are a variety of consequences that might arise from both the regulator as well as the exchange itself. And just to preempt, such might be financial penalties, and this can be structured as once-off fines or could be accumulative according to how these fines are structured. We equally have, they could be publicly censured There could be suspension of the trading, well, depending on how this assessment has been done. And so it's not a one size fits all. However, there are consequences that could come from both the SEC as well as the LUSE. Thank you.
Okay. Thank you, Natasha, for that. We have another interesting question. It says, what do I do if my stockbroker is overcharging me? So we do understand that the broker's fee on a transaction is 0.2%. So now there's a question from a participant here who's saying, what if they charge you 0.35?
Thank you. Question. It's quite an interesting question because a broker is not supposed to charge you more than what they're supposed to charge you. And if that is the case, then that has to be registered as a complaint to the commission. And I think later on you speak to where they can submit their complaints, and then from there we can pick it up from there. Yeah.
That's well put, Francis. So we do have we'll put our contact details for where you can submit
so
your
you do report it as a complaint, as Francis has rightly put, and the SEC will definitely look into it. Okay, our next question comes from one of the risks from James. He says one of the risks highlighted many times is that there's very low trading.
Interesting question about the liquidity of the market. It's kind of a tricky question because people have got different investment goals. Others would hoard when they buy, others would hoard and sell, buy, sell, those transactions. So you find that actually in markets that are highly liquid, investors would be like buying and selling, and in that way there is much liquidity. As rightly put, yes, there is that liquidity risk, but also people have to have an understanding of what trading in shares entails. But again, we cannot run away from the fact that different individuals have got different financial goals that I've set. So others would buy and then be able to hold for a longer period of time. Then that affects the liquidity of the market. But in an instance of where now in such educational awareness programs that we're doing, for people to be aware that share trading is like this, you can buy and sell, then that would boost the liquidity in the market.
Thank you, Francis. Natasha, would you like to add?
Thank you, Stanley. Thank you, Francis. Just to add on what Francis has said, as rightfully put, dealing with low liquidity in the market, especially in our equity market, is quite challenging, especially for our investors, traders, and even for us regulators. And what this low liquidity means is that there are few buyers and sellers, and this can result in a much more larger price swing, and making it very difficult to execute orders and potentially giving a more wider bid ask. And so what can we do to mitigate the effects of low liquidity? If you have been following us, we are doing a lot of investor, just to enhance investor participation. More so, we have been doing a lot of awareness campaigns in such, and just promote a broader investment participation. Well, now that you and I have learned today that there's something called capital gains, you were hoping that could actually prompt activity in the trading, as it were. And Well, we're also just ensuring that we provide that enabling environment just for investors to have the leeway to trade as and when, and not necessarily hold on to their securities. And I think the other interesting could also be a liquidity incentive. And I know there's been some conversations going around with the listing rules currently undergoing reviews. So we're hoping that that is something that will come out and try to remedy that, as it were. And it's also important to sort of develop that rapport with especially the small investors. I mean, we have this perception of investment is for the prestige, investment is for the rich. However, you can start small. You could start as a retail investor. Of course, you face challenges here and there, but if we have that high trading transaction, I think that will yield a lot of response, as it were. And I thought I could just add on to that.
Okay. Thank you so much, Natasha, for that. James, I hope that answers your question. And I do hope you are an investor on the LUCE in the markets, because that then your part, the part that you need to play is also very cardinal in you being an investor. It helps just improve the liquidity on our market if all of us get to participate more on the market. Chosi, your question has been catered for, or rather it was dealt with in the presentation where you're asking if a broker, how you can go about buying, selling shares after you've done your research. Francis did highlight in his presentation the 4 steps that are involved in the trading process or the buying of shares. So if you missed it, we will share the presentation and you'll be able to just pick up your response from there. Rifan also, you do ask a question saying, since you're an investor, since not every investor is educated to conduct satisfactory research, can a broker be able to advise in case an investor's choices are not rational? Yes, they can, because that is their mandate as brokers. They do offer investment advice. They are licensed and professionals who are qualified to give you advice based on the needs that you have or the investment needs that you may have. Then there's a Beauty Msonda. You mentioned that you've heard stories and concerns from investors about possible market manipulation or insider trading, not specifically on the LUCE, but elsewhere, I'm sure. How does SEC ensure transparency, fairness in Zambia, in the Zambian stock market, and what systems are in place to detect or prevent such practices? Okay. I'll pass this one on to our surveillance desk.
Thank you, Stanley, and thank you, Francis. And to answer that question, like our listener has clearly stated, indeed, there are cases where we have insider trading scenarios as well as manipulations, and the Commission is proactive in that we have mechanisms that I may not be able to disclose right now that we actually use in detecting these insider trading cases that may, if at all it does happen. But then as well, if at all there are investors out there that would have information pertaining to any insider trading or even just a suspicion, we do receive even tip-offs, information that you can submit to the Commission with regards to a suspicion of an insider trader or any manipulation on the market. But as well, as I earlier mentioned, we are proactive in trying to identify these even before they materialize on the market. Thank you.
Okay, yeah, thank you so much for that response. Our next question is from Sunny. If I want to transfer my shares to a particular person, such as a spouse, child, etc. How do I go about it? Okay, we'll get a response also from our supervision team.
So I think Francis did mention earlier that a broker is our intermediary. So with regards to anything to do with our transactions, if at all you want to transfer shares, in any inquiry that you may have, the first point is to engage the broker. So once you engage the broker, they'll be able to start the process for you. There are some forms that are filled in. So the process starts from there, and they do assist in that particular, just to ensure that the movement of the shares are done. And we also actually, there is a role that's played by the transfer agents, the transfer secretaries, that also play a role in this particular movement of shares. Okay.
Okay, thank you so much for that response. We're at 16 hours, but we have a couple of questions, a few more questions to go. So we will try and just be quick in our responses so that we can tackle as many questions as possible. Edwin Zulu, you have a question stating that is there a way that the CSD can ensure the T+3 is maintained and execution is faster? Because usually it takes longer, sometimes even 2 weeks before shares bought reflect in someone's account. Team, is there something that what can we give as a response to Edwin?
Yes, thank you, Mr.
Sometimes if you make an order to say you want to buy shares, for example, in company X, what is imperative to know, understand is that, is there a matching order? Is there a buy and sell transaction? So if there is a seller, there is no buyer, that cannot happen in 3 days. So the 3 days happens if there is a matching order. So there is a buyer who's willing to buy shares in company X at 4 kwacha, and there is a seller who's willing to. That happens.
Okay. I hope, Edwin, that answers your question. So it's not that the T+3 is not being maintained. If you do not have your shares reflecting in your account for 2 weeks or so, it means your transaction didn't happen. Your trade did not settle or did not match. Once a trade settles, it would then be monies and shares would then be transferred in the T+3 time that has been stipulated. I hope that is clear for you. Okay, there's another question here. This one's asking us where we found on the Copper Belt. Unfortunately, we are not on the Copper Belt. We are only found here in Lusaka, but we are on all social media platforms. So you will find us on Facebook. You also find us on Twitter, as well as we've just launched a WhatsApp channel. So I'll share that at the end of our Q&A session, where you just see how you can also interact with us on WhatsApp, and we'll be able to respond to any queries or any issues that you may have and may want to address with us. Okay. The next one is what could be the reasons that it takes longer than 3 trading days? I think this one has also been tackled already. From an anonymous attendee, is there a specific period that one can sell their shares? Like at any time, is there a specific time or period that one can sell or can buy shares? Is there a limit? I don't think there's a limit there. You simply can trade during the trading hours, which are from 10 to 14 hours. So that's the time so not a specific period in terms of maybe a day of the month or a day of the week. No, it's just trading hours. So the Luce is open from 10 hours to 14 hours. So that's the time in which that you can trade, as well as Monday to Friday. It's also closed on the weekends, as well as closed during the holidays. Okay. What is COPSEV and what is their role? I think there was a response where you mentioned the transfer agent. So please just elaborate that part a bit more.
Okay.
COPSEV is the transfer agents, and by transfer agents, we mean, remember I talked about, if you attended the full presentation, I talked about the dividends. So when dividends are declared, they have now to be remitted to either the institutional investors or individual investors like you. But to facilitate that process, we've got transfer agents, and these are the people then who are in charge of then dispersing these funds to the various investors as the dividend is declared. So they will request for your account details and what, so that everything is, your KYC is intact, as I spoke about. Then they'll be able to transfer your funds when the dividends are declared. So they maintain the shareholders register. So if for example, they're in charge of CEC or Copper Belt Energy Corporation or ShopRite or whichever listed company, they'll then be in charge of that shareholder register, so that when dividends are declared, they would now, it's their role to transfer the dividends declared to the investors who are eligible to get their dividends.
Okay. Thank you, Francis, for that. So while I still have you on the floor, speaking of dividends and payment and delivery of shares, in what form do the shares appear in the buyer's accounts? When one buys, in what form do they appear? So this is coming from McLean Sakala. So our shares are demutualized. So meaning they are not, dematerialized. They are not physical. It's not a physical object that you are going to get to see, okay? It will be added to your account in terms of numbers. And then if you get a statement from the CSD through your broker, you'll be able to see that you've got so many shares, okay? Yeah, so it's like money in the bank. So it's not a physical paper that you get to receive, because the LUCE shares are, the LUCE operates in a dematerialized form. Okay, I hope that answers your question, McLean Sakala. And then we have another interesting question here. This one is concerning the LUCE app. Yeah, so what is the plan concerning the LUCE trading app? This person says that most of us are having problems using the app. So, team, anybody? Okay, so what, Francis, you'd like to give it a go? Yeah.
Join the question again.
I think this person saying they're having trouble using the app. Okay, so what we know from our end is that the app is still undergoing development and revision. They're trying to see how best to improve the performance of the app. But one thing I must just mention is that trading using the app happens the same way that the trading using the normal trading platform works. For example, I mentioned that for you to transact on the LUCE, you need to transact during trading hours. So you'll find that the app is active during trading hours. So you need to transact during that time as well on the app. If you try and log into the app at a time outside the trading hours, you will face a few problems here and there. So I thought I just mentioned that, unless there's some addition.
Yeah, rightly put,
So the app is, as usual, up and being developed. So we want to ensure that it helps in terms of facilitating of the trading of securities on the securities exchange. And given that it is a tool that we can also actually use to advance the agenda of financial inclusion. So there are all those issues that we are running with, but otherwise your response suffices.
Okay, thank you, Francis. So this other question is focusing on dividends. If a company fails to declare dividends for more than 10 years, where can the investor complain?
When I talked about
Dividends, I think I stressed a little bit just to give a basic understanding that as an investor, you need to know the dividend policy of this institution, and also what drives the company to be able to declare dividends. It can be very difficult very difficult for a company that is not performing well to declare dividends. But then the dividend policy, if read and understood, I think guides very much. And that's why it is important for investors to be able to read and make informed decisions based on that. It's not a guaranteed return that you're going to receive dividends at every financial year end.
Thank you so much for that answer, Francis. Well put. So like Francis has mentioned, as an investor, we need to do a lot of research in order to understand where you want to place your money or how the company that you are placing your money with is operating. There's a follow-up question actually to that from Emmanuel, which is stating that when, as an investor, should I be considering, what should I be looking out for when investing in a company? Which is something that Francis did mention in his presentation. You firstly have to do your own research, that you find out how these companies performing and whatnot. And then also based on the needs that you have, you need to speak to a broker. Like we mentioned at the beginning of this presentation, we are only offering educational information and not financial advice. So if we did start stressing to you and telling you what you should consider between company A and B, would then be getting to a space of financial advice, which is not our space. I hope that answers the question and actually brings us to the end of today's town hall. And like I mentioned, I just wanted to emphasize that we are now getting into our scams campaign, which we have launched on Facebook. So if you go to our Facebook page, you'll be able to just see posters and flyers concerning scams. So we'll be posting a lot of information regarding scams because we have noticed a rise in people being scammed and people losing money, and we will want to make sure that you're protected. So please just look out for the scams campaign, which is running on Facebook from now to the end of the year. Okay, thank you all for joining us today for today's town hall, and we will be having another interesting town hall where we continue the options that you have for investing in the capital markets, where we'll then get into another space, which is called collective investment schemes. Thereafter, we'll get into another space for bonds and how you invest or participate in bonds. Like I mentioned, there are several ways that you can get hold of us. You can speak to us on Facebook, as well as our recently launched WhatsApp channel. We will be sharing the link just now. Please feel free to join us and interact with us on that channel. It's a one-way channel where you can interact with us, but your information will not, it's not a group, so your information will not be shared to other people. Only the commission staff that are administrators will be able to respond to you. So please feel free. You will not be at risk of being contacted by an unknown person because they picked your number from our WhatsApp channel. It doesn't work like that. So you will be able to interact with the commission on the WhatsApp channel, which we'll post in the link so that you can have access to the commission. Thank you so much once again for joining us. See you next time.
Here's everything you need to know about being a smart investor. A smart investor recognizes the benefits of planning for his or her future needs and goals, such as education, marriage, buying a car, or even buying a home. A smart investor recognizes the benefits of regular and diversified investments to protect investment from losses, unexpected events, and always looks before they leap so that they can cash in on the wonderful effects of compound interest. After all, a smart investor knows every investment opportunity is unique and should match their needs, goals, and risk tolerance while making sure to ask all the right questions. A smart investor is not under pressure to make